Now let us discuss about actual cost. So actual cost is defined under section 43 subsection 1. Let us try to understand why we are going to discuss this. When we have to claim depreciation, we claim depreciation on the closing WDV of the block, correct? Very good. Now how we arrive at the closing WDV? We take opening WDV, add purchases, then deduct sales, then we get closing WDV. From that we deduct depreciation. But now opening WDV is there, sales we will get, but purchases. So what should be the value of purchase? Should we take only the purchase price, or should we add something else, or are there any things which we have to remember relating to that? And that's why we are going to discuss this topic, and that is section 43 subsection 1, actual cost. So when I am talking totally about actual cost, it is about that additions to the block or purchases, right? Like this, whatever is written in the books, to that we are going to discuss about actual cost. Now generally this is total common sense, so you need not do rote learning for these type of topics. Okay. Now if you went to purchase a refrigerator from the market, suppose the showroom person said that refrigerator is worth 20,000 rupees. Now just pay 20,000, is it over? No, right? After that what you need to do, you have to bring that refrigerator to your house, so you have to pay traveling charges for that. After you bring it to the house, it's not over. Then the serviceman will come, that installation will be done, so that installation team will come and you have to pay them also, right? If you, so like this you have to understand that there are certain additional costs, and it is not just the purchase price. So whenever we talk about actual cost of the asset under section 43 subsection 1, it is the purchase price which we pay. Okay. And not only that, but any expenditure incurred to bring the asset to the present location, that is traveling cost. Any expenditure incurred to put the asset to usage in a usable condition, like we can say loading, unloading, we can say that carriage inwards, because factory is a very big thing, right? So from the factory gate till the plant site we have to bring the asset, so that is carriage inwards. Okay. Then we have loading, unloading as we discussed. Then we have something called as installation charges. Sometimes after installation, is it really working, we have to do check, right? So trial run, some expenses will incur. All that forms part of the cost of the asset. Now for your understanding, I'll tell that if trial run expenses are added, you also should deduct trial run incomes. Suppose any trial run incomes are there, we have to deduct that. This you should be able to remember. Sometimes we want to increase the capacity of the asset. For that what we do, we actually spend something. Now we are increasing the capacity. We have brought one plant, then we understood if we bring one more motor, that plant will work more efficiently. Okay. It will do more production. Okay. So to increase the production, if any expenditure is incurred, that should also be added. Now there are certain policies which government actually makes from time to time. So considering that, there are many aspects which we should study. So first being about cash. So can we go and purchase the asset in cash and enjoy the depreciation on that? The answer is no. Government says that you have to make payments through digital mode only. That means it can be an account pay check, it can be a demand draft, it can be through electronic mode. That's all okay, right? Or through even Google Pay, Phone Pay, you pay, not an issue. Are UPI Beam app, you that you can pay. You can do NEFT, RTGS, no problem. IMPS, no problem. Paytm, no problem. but it should be through digital mode. If you are making payment through cash on a single day, up to rupees 10,000, it's okay. Government says we will allow small petty items, right? But if the single transaction, single payment exceeds rupees 10,000 in cash, whatever paid in cash will not be allowed. Suppose you purchased an asset. Suppose you purchased an asset for 1 lakh rupee. In that you paid 80,000 through check, but 20,000 you paid in cash. Okay. What will happen? In that case, 80,000 will be treated as cost of the asset, actual cost, and you can add as purchases. But 20,000 is totally disallowed. That means cannot be considered as asset. That means you will neither be able to claim depreciation on that 20,000. You cannot even consider it as revenue expenditure and claim deduction. Right? So that's how you should understand about cash. Now come to, if some assets you received from your father in the name of inheritance, or you received from some friend as a gift, what should be the value of the asset and what should be the cost of that asset? So we can say WDV to the previous owner. Now here also there can be two cases. Did they purchase and gift it to you? If they purchased in the previous year and gifted to you, then the actual cost, the purchase price will become your actual cost. But if they are using from so many years and then they transferred it to you, like Dhirubhai Ambani did lot of business, and after doing so much of business, he transferred the business to his son. If it is the case, then what will happen to Mukesh Ambani, Anil Ambani? So it is a case of inheritance. In that case, what will happen? WDV to father in his books, same WDV will become cost to the son. Okay. This is inheritance and gift case. Right. Suppose to purchase the asset, sometimes we take loan, right? And when we take loan for purchasing the asset, we also pay interest on it. Now, whatever interest paid up to the date of putting the asset to use, I am saying up to the date of putting the asset to use. So if any interest is paid on the loan up to for that asset up to the date of putting the asset to use, that is added to the cost of the asset. That interest is also forming part of cost of asset. But if suppose you paid interest after putting the asset to use, right? Now asset is operational and now also you are paying some interest. That interest is a revenue expenditure allowed as deduction while computing business income. So you will compute your P&L account, right? You can debit it in simple language. Okay. Great. So with that we will continue with the next thing, subsidy. Now government gave you subsidy either in the name of cash incentive or in the name of government grant or in the name of subsidy. So anyhow your asset was something around 5 lakhs rupees, government paid 1 lakh. So actually how much you paid from your pocket? You did not pay 5 lakhs, 1 lakh government paid, right? So only 4 lakhs you paid. That 4 lakhs becomes your actual cost in case of subsidy. Suppose the assets are convertible assets or assets are such that on which input tax credit is available. So what will you do in that case? Suppose it is a convertible asset on which input tax credit is available. Now, dekho, when excise duty was there in the past before 2016, we used the word convertible asset. Same are continued in CMA book, so I am teaching like that. Okay, but in GST era, we use the word input tax credit if it is available. So what will you do? So suppose asset cost is 1 lakh, 18% is GST. So will you show 1 lakh 18,000 as the cost? The answer is no. You will show only 1 lakh as the cost because 18,000 you will get the credit again, right? You can deduct it when you pay output GST, right? So if credit is available that cannot form part of the cost. That's how you should remember. There are many smart people which we know, right? People actually what they do, they purchase assets simply to avoid the tax. Can it be done, sir? Yes. Suppose there is one asset which is worth suppose 1 crore rupees and your friend is selling that asset. And what you did in between your agreement, you said that show it as 5 crores. Now what happened? You purchased actually for 1 crore, but in books of accounts you are showing that it is purchased for 5 crores, and on 5 crore you want to claim depreciation. So automatically your income will decrease, your tax will be less. So this is purchase of asset to avoid the tax. If the income tax officers come to know that is he doing like that for avoiding tax, and is it overvalued? Oh, 1 crore worth asset, they are showing 5 crores as purchase price. Wait. Assessing officer will come and say, let me check. Then assessing officer will value the asset and he will say this should be taken as actual cost. He will say maybe 1 crore should be taken as actual cost, and in your books of accounts for income tax purpose it will be 1 crore only, not 5 crores. Sir, my purchase price, my bill invoice is 5 crores. Let that bill invoice go to hell. You try to avoid tax, so we'll consider it as 1 crore only. Assessing officer decides. But before deciding all this, assessing officer should take the approval from deputy commissioner, joint commissioners, okay, from his seniors. That's how things operate. Many a times what happens that I actually sell the asset. I sell the asset and again reacquire that asset. Nothing wrong in it, right? I sold the asset to you for 1 crore. I again purchased the same for 1 crore 20 lakhs. Now I want to claim depreciation on 1 crore 20 lakhs because I paid 1 crore 20 lakhs, right? I sold for 1 crore. I purchased for 1 crore 20 lakhs. So my purchase price will become the actual cost, right? Income tax says, wait. Reacquisition of the asset sold, right? Yes. So government says, Ganesh ji, let us take the WDV for you. It was 1 crore. And what is the sale price for you, Ganesh ji? 1 crore 20 lakhs. Oh, sorry, purchase price 1 crore 20 lakhs. Out of this, what is lower? Sir, 1 crore is lower. Okay, so 1 crore will be treated as actual cost. अब ज़्यादा होशियारी नहीं करने का, ठीक है? So that's how government actually decides. For that, rules are made properly. Now, sometimes what happens? What we do is, you have an asset with you. You have an asset with you. You sold that asset to me. Suppose example, many a times in old Hindi movies you see that you have a building. Now you want to sell that building because your daughter's marriage is there. For that, no money. So what you did, you sold the building to me. And then you came to me, sir, ये building थोड़ा rent पे दे दोगे? बेटी की शादी हुए तब तक please. I can understand the concern, right? So I gave it on rent to them. So what I did, I acquired the asset and gave it on lease to the seller itself. Right? Now I gave family example, residential property example. Suppose it is business property. Then whatever WDV to the seller, that becomes the WDV to the seller becomes the actual cost. Now here also there are two aspects. One is the WDV to the seller and second is my purchase price, right? So what should be taken? So they directly said it should be WDV to the seller. Okay, very good. I feel you understood what I tried to convey. Now I will tell you that if suppose you actually have a house property, building. Now building, you used it for personal purpose. Suppose as of now, whatever shootings I am doing at my house only, right? Now my video shooting, recording, online classes, recorded, everything goes so big that now I need the whole building only for my employees and working and all. So what I did, I converted this residential building to my business place, and I constructed another building for my family purpose maybe. But this building at least is first the personal purpose and later on converted to business purpose, correct? Now in this case what I should do? I should simply, sir, when you constructed this? Sir, in 2018. Okay. So from 2018 to 2022, 2022 you converted it into business. Yes, sir. So whatever purchase price in 2018 was, or if I constructed the building, construction cost, I'll take that. From that I'll deduct depreciation for 18, 19, 19, 20, 20, 21, 21, 22. Like that I'll deduct the depreciation for so many years, and whatever WDV comes, that WDV will be cost for my business. That WDV will become the cost for my business. Are you clear with what I said? Yes or no? Any doubts? Perfect. Right. So actually that 4 years it was not used for business, but still we will assume that it was used for business, and we will take the cost from that, deduct depreciation for all that 4 years, and whatever WDV comes, that I will consider as the actual cost for the purpose of business. Same story applies if I have used the asset in foreign country for few years. Suppose my recorded classes continue in Hyderabad and I have some faculties who are teaching from America. अरे सर क्या बड़े बड़े जोक्स मारते हैं, चलो जोक्स ही सही, बट सपोज आई हैव लॉट ऑफ कैमराज देयर एंड सम authors from foreign countries are teaching, let it happen. So there we used the camera for suppose 5 years and now we want to bring that to India. So what happened? Asset used in foreign country for business or foreign country brought to India. Now there I did not claim depreciation. Okay, so what I can do? Here I can claim depreciation for that many years, and from the actual cost minus that many years depreciation, that WDV will become the cost for the purpose of business here. Okay, are you able to connect with it? Oh, we covered so many points, right? Chal, we'll continue with the balance points also. Just concentrate. Now, holding company transferring the assets to subsidiary company. Amalgamating company transferring the assets to amalgamated company. Demerged company transferring the assets to resulting company. Now actually why I am telling these 3 points at a time, because the treatment in all the 3 cases is same. For your understanding, let me tell what is holding and subsidiary. Suppose example, Bade Miya Limited purchased 51% or more shares in Chote Miya Limited. So more than half the shares are purchased by Bade Miya Limited in another company. So this case we can say that it is a case of Bade Miya is holding and Chote Miya is subsidiary. Okay. Now amalgamating. Suppose example, Tata Steel purchased Chorus company. So what happened? Oh, it is not a right example to give, because it is a case of acquisition, not amalgamation. Suppose there are 2 companies which merged and became one. Suppose I can say that Airtel is there. Airtel actually amalgamated Uninor, Telenor, Docomo, all that companies, right? In that case, we can say that Uninor, Telenor, Docomo are amalgamating companies. We should use the word amalgamating companies, right? Even Airtel is, but let us assume. Okay. And what is amalgamated company? Airtel is the amalgamated company. So in simple language, old companies are amalgamating companies, and new company created, or the existing company who took the old companies, existing companies, and became big like Airtel is amalgamated company. And last one, demerged company. Suppose there is a very big company like Hero Honda was there. In the past we were to hear Hero Honda, Hero Honda. What happened? After that the management had disputes. So one company became Hero company and another company became Honda company. Right? Now, suppose Hero Honda is the main company. So in that case, Honda, we can say that it is demerged company, and the new company came out of it is the resulting company. Can we use the word Hero as resulting company? Okay. So like this we should remember the words, understand the words. Now what should be the treatment? Treatment is super simple. I'll tell you what is that super. First thing, there is a giver and there is a receiver, correct? So one company or one organization is giving the assets and other company is taking the assets, receiving the assets. So whatever WDV to the giver in their income tax returns, the same WDV will become the actual cost to the receiver company. Suppose holding company is giving and subsidiary is taking. In that case, whatever assets given, the WDV of that will become the actual cost for the subsidiary who is taker, receiver. Same way in case of amalgamation, same way in case of demerger. Now, demerger, there is some extra thing to discuss. Suppose I have 10 chocolates, right? And I have 10 chocolates. So in that, I gave 4 chocolates to Mr. Harsh Bengani. Now what happens? So how many chocolates I have with me? Sir, you have 10 chocolates. Are yaar, I have 10 chocolates. I gave 4 to Harsh, right? Now how many left with me? 6, correct? I have 6 chocolates. Harsh has 4 chocolates. So in our demerged and resulting company story, remember that demerged company will have whole WDV of the assets. So whatever they transferred to resulting, that WDV of assets transferred will become the actual cost to the resulting company. And whatever WDV the demerged company has earlier minus WDV of assets transferred will become the WDV to demerged company. Like 10 chocolates minus 4 will become 6 for me and received 4 by her, so for him 4. Like that you should remember. I feel you are clear. Hey, all of you know that Bombay Stock Exchange and National Stock Exchange are companies. Sir, ये कौन सी नई चीज है? अरे, this is not new. Do you know that? Yes, these are companies now. Now, but many years back, these were not companies. These were associations. So stock markets like National Stock Exchange, Bombay Stock Exchange were associations in the past. Now government said that these associations should not remain as association. Let us convert them into companies. So let us corporatize it. That's what happened. Now for association in the past, every company who is a member, who is a trader, were to pay membership fees, right? And after corporatization, they all should get the shares, right? This is what happened in the past. But we are not going to talk about the shares and all. We'll only talk about the association had certain assets, like some computers were there. Now when it is converted to company, what would be the actual cost for the company? So we will say WDV of assets to that association will become the actual cost of assets for the stock exchange, the company. That's what we have to understand. Now there are certain people who are doing business, but they don't file income tax returns because they are not required to file income tax returns. Can there be such organizations? Yes, there are. So then don't need to file income tax returns. So if they have assets which are depreciable, can they claim depreciation? No, right? But after 3 years, their income became taxable income and they are filing income tax returns. But the assets are 3 years old, right? So how they should claim? What should be the WDV? The answer is very simple. We should assume that in the last 3 years also, the assets were depreciable and deduct the depreciation for all the 3 years, and whatever WDV comes, that becomes the actual cost while you file the income tax returns. You cannot say that no, from this year I am actually filing the income tax returns, right? So from this year only I'll start taking depreciation. No, nothing like that. Not allowed. So what I am saying to you, that you should claim depreciation even if you are not required to file income tax returns. I feel you try to understand what I tried to say. Okay, shall we go to the next thing? So even if you did not have to file income tax return, for every year you should file income tax. Every year you should calculate depreciation, deduct it from the WDV and get the new WDV. That's what I have said to you. Now, there are certain assets which I'll be talking about in latter part of this lectures. There is some section called as section 35 AD. We call it as specified business. We call it as what? Specified business. Like cold chain facility, petroleum pipelines, oil pipelines, gas pipelines. You would have heard something like hotel with 2-star or more accommodation, hospital with 100 beds or more. So these are few examples which I give. So these are called as businesses which are specified businesses under section 35 AD. So whatever capital expenditure incurred under section 35 AD, that is specified businesses, entire capital expenditure is allowed as deduction, 100% deduction. Now, in the first year itself, if 100% deduction is given, so on that capital asset, can we again claim depreciation? Already 100% deduction is given. Suppose they claimed they constructed the building with, for hotel, 5-star hotel they constructed with 100 crores cost. 100 crores is already given as deduction in first year. Now, can we again claim deduction for that 100 crores under section 32? No, right? And that's why income tax said that actual cost under section 32 will be treated as zero, nil. Under section 43 subsection 1 will be nil. Why? Because already deduction is given, 100% deduction is given. If suppose under section 35 also, if there are any assets on which you get 100% deduction because they are used for scientific research and all. So you got 100% deduction for such capital assets. Then no depreciation will be allowed. So there is no actual cost under section 43 subsection 1 for such assets. Start last point in this really big topic, actually actual cost, right? Sometimes what happens, you have inventory. Suppose you are a goldsmith or you have a jewelry shop. Now you have a jewelry shop, but what you did, you have lot of jewelries. But now out of all that jewelries, you decided that let me keep certain jewelries as display jewelry only, not for sale, only for display. Now what happened? Now they have been now capital asset for your business. They were inventory for sale earlier, but now only for display, right? Capital asset. So in this case, what will you do? So when you purchased the jewelry or made the jewelry, there is some actual cost, right? So can we take that as actual cost for capital asset purpose, for depreciation? The answer is no. Sir, then what should we take? So the day when you converted it to capital asset, on that day, what is the fair market value you should determine? And whatever fair market value is there, that fair market value will be treated as the actual cost of the asset on which you can claim the depreciation. Suppose for a real estate agent, building is stock in trade, for him inventory. But some assets they were not able to sell, or sometimes he felt that I'll use this as my office, some building. So he converted the inventory to capital asset. Whatever fair market value on the date of converting to capital asset, that will become actual cost and he can claim depreciation on such building later on. Clear to all of you? Yes or no? Similar example I gave jewelry also. Now we'll understand some interesting topic. Now just in 10 minutes I feel we'll be winding up this depreciation part. Now suppose there you purchased an asset from foreign country, because lot of technology items are there, we purchased it from foreign country. Suppose most of the capital equipments we are purchasing from, क्या यार चाइना का नाम नहीं लेना, छी छू छोड़ दो. So we'll take the example of, suppose Russia, we purchase from Russia. So we purchase capital equipments from Russia, and when we purchased capital equipments from Russia, we purchased by taking certain loans. So we took the loan in the form of rubles, not rubles is right. Now we took the loan and we are also paying interest in the form of rubles. So now Indian currency and rubles, Russian currency, there is some exchange fluctuation time to time happens, correct? Now suppose you purchased some 1 lakh rubles you paid, and suppose the price is in Indian rupees 30 rupees. So what is the actual cost of the asset? Sir, 1 lakh into 30 rupees, 1 lakh rubles or 100,000 rubles into 30 rupees is equal to 30 lakhs is the actual cost. You will consider it in the block of the asset, add it and claim depreciation, it will continue. But whenever on that you are paying the loan and suppose the price became 30 to 35, so you have to pay extra 5 rupees, correct? That 5 rupees into 1 lakh, 5 lakhs will be added to the cost. Now when it should be added? In the year of purchase? No, in the year of payment it should be added, and after adding then you claim depreciation. Suppose example, for us we have to understand, in the first year we purchased on 1st April, so we took 1 lakh into 30, so 30 lakhs. From that there is no change, so we claim depreciation as required. In second year what happened? You paid the amount by paying extra, so whatever extra you paid you will add to the WDV, and then whatever value comes on that you will claim depreciation. That's how we should do. No need to practically see line to line to remember this. It's simple common sense. You paid additional money, that whenever you paid that should be added. Simple as that. Okay. Now let's come to unabsorbed depreciation. I feel you understood this. Hey, sometimes it can be reverse also, right? You may not have to pay 30 but you paid 28. So what should we do? If you paid extra, you added, right? If you are paying less, what will you do? You will deduct and then claim depreciation on the reduced value. It's as logical as possible. Okay. Now we will have to understand something called as unabsorbed depreciation. Now what do you know about unabsorbed depreciation? देखो यार, every business tries to earn profit, correct? Everybody. Anything wrong? अरे absolutely right sir, profit तो कमाना है, we have to earn profit. Now after deducting all the expenditures, you got, suppose your net profit before depreciation I am talking about, to be suppose 10 lakhs rupees, and your depreciation itself is 15 lakhs rupees. So profit before depreciation 10 lakhs, but depreciation 15 lakhs. Now your business is able to absorb the depreciation or not able to totally absorb. I again tell you that profit is 10 lakhs before depreciation and depreciation is 15 lakhs. So are you able to absorb? The answer is absolutely no. You are not able to absorb. So what will you do? So from profit of 10 lakhs, you will deduct 10 lakhs depreciation and you will say that business income is 0. But sir, what about that 5 lakhs? That extra 5 lakhs is there, na? That we call it as unabsorbed depreciation. What will we call it as? Unabsorbed depreciation. क्या बोलते हैं हम उसको? Unabsorbed depreciation. So that depreciation which profit is not able to absorb, not able to cover it up, we will not deduct it, but we'll show it as unabsorbed depreciation. Did we deduct 5 lakhs and say minus 5 lakhs? That means there is a business loss of 5 lakhs. No. So whenever you are doing any PGBP problem, please remember that keep deducting depreciation at the end only. You don't deduct depreciation beforehand at the start. Accounting depreciation you will be adding. It is wrong depreciation, right? And income tax depreciation you will deduct. But first deduct all expenditures, then get your business income. From that you try to deduct depreciation. If depreciation is more, then that extra will be treated as unabsorbed depreciation. But up to the amount of business income will be deducted as depreciation and treat business income as nil, and extra depreciation is there, that will call it as unabsorbed depreciation. Now from the business head, are we able to deduct this 5 lakhs? So no profit, so we cannot. So what can we do? We have house property chapter, we have capital gains chapter, we have income from other sources chapter, we have salary chapter. From that incomes, can we deduct this unabsorbed depreciation? The answer is yes. But from salary and casual incomes means lottery, crossword puzzles, sudoku. So from casual incomes and from salary, you cannot deduct unabsorbed depreciation. From all other incomes, yes, you can do it. Okay. But you don't have any other income, or any other income is there but it is not sufficient. Suppose house property income of 2 lakhs is there. So from that 2 lakhs you deducted 2 lakhs. So house property income also 0. But still how much unabsorbed is left? Total 5 lakhs, right? From that 2 lakhs deducted from house property chapter. So how much? 3 lakhs is still unabsorbed. So what can we do with it? So please remember, this unabsorbed depreciation will be carried forward. Carried forward means from the next year's income we can deduct these 3 lakhs. Sir, for how many years we can deduct like this? There is no limit, infinite, unlimited years. We can actually claim this unabsorbed depreciation. No problem at all. Happy? Okay. But again, same rule, remember, from salary you cannot deduct in next years also, and from casual incomes like winnings from lottery, crossword puzzles, you cannot deduct. From all other income you can deduct unabsorbed depreciation. As I said about unabsorbed depreciation to you, please remember, same way section 35 AD, if suppose capital expenditure is there, that also you are not able to deduct. That unabsorbed specified business related loss also you can claim for unlimited number of years. Okay. Sir, If we did not file the income tax return, still can we claim unabsorbed depreciation? The answer is yes, you can. Don't worry about it. Okay, like this you should remember about unabsorbed depreciation. But please understand what should be the sequence. How should we do with? Suppose in the next year from business income we have to deduct the current year depreciation, we have to deduct any brought forward business losses are there, and even we have unabsorbed depreciation. So what should be deducted first, what should be deducted second? Now for your knowledge I am telling, next year when you compute business income, section 30 to 36 all expenditures you will deduct. Whatever business income comes from that I am talking about, because business income before depreciation I am talking about. Okay, from that should we deduct current year depreciation first, should we deduct last year's brought forward losses, or unabsorbed depreciation? What should be first? So first remember that deduct current depreciation. After that still business income remains, then deduct brought forward business loss, still remains, then deduct unabsorbed depreciation. Okay, this is how the sequence you should remember. This is very important for your understanding. Okay, 72 73 is set of chapter, there we will recap. Okay, now is depreciation a mandatory deduction? The answer is yes. Suppose what happened in the past, I will tell you. There is some concept called as section 10AA, that means SEZ, that means special economic zones. Now for the first 5 years you earn any income, no need to pay tax. There is a section called as section 80JJAA. There if you are converting biodegradable waste into electricity, 100% income is allowed as deduction. So what people were to do, and that too for 5 years only. So first 5 years why should I claim depreciation? Anyhow there is no tax on us, right? So from 6th year we will start claiming depreciation. That was the thinking which the taxpayers tried to utilize. So government suffered a lot of money because of that tax planning. So then government said no, depreciation is mandatory. So that means even though there is no income tax on you, you need not pay any tax, still WDV will be calculated as usual. So opening WDV, add purchases minus sales, closing WDV, that should continue every year. You cannot say this year I'll skip claiming depreciation. No, it is mandatory. Every year from the date of purchase of asset, you are mandatorily required to claim depreciation. And shall I go to the last part, that in case of succession what should we do? Amalgamation, what should we do? Demerger, what should we do? Suppose what happens that in this year XYZ and Co partnership firm is continuing the business, they converted to company. Now even the partnership firm need to file income tax return, the company need to file income tax return. Now depreciation should be calculated for the full year. Now should the company claim depreciation or should the firm claim the depreciation? Who should claim? So income tax came out with clear cut procedures. They said please wait. First calculate depreciation for whole year. What should you do? Calculate depreciation for whole year. As if there is no succession, no amalgamation, no holding subsidiary, nothing. Calculate depreciation for whole year. Now once you get the depreciation amount for respective block, maybe for building separately, maybe for furniture separately, maybe for this for plant and machinery separately, for intangible assets separately, something you got. Once you got the depreciations for each and everything separately, now based on the days you have to divide the depreciation. Suppose example July 1st the succession happened. So April, May, June, 3 months. How much it will come to? 91 days. April 30 days, May 31 days, June 30 days. So totally 91 days divided by 365 into depreciation. For which organization? For XYZ and Co. Now 91 over, right? So out of 365, how many days are left? 365 minus 91. Okay. So when we do, it will come to 274, I feel. So roughly I am telling. So 274 divided by 365 into depreciation for XYZ Limited. So like that we will do. First calculate depreciation for whole year, and after that divide on the basis of days, right, of holding. Suppose in between new asset is purchased by the XYZ and Co. Suppose new asset is purchased on 1st June. No problem. So for the 30 days XYZ and Co will claim, and for the balance 274 days the XYZ Limited will claim depreciation. So denominator will be 365. How can it be 365, Ray? 30 plus 274, how much? 274, 284, 294, 304, correct? So 30 by 304, 274 by 304, like that for new asset. Okay. Sometimes what happens, you may say that new organization XYZ Limited purchased the asset. There also no need to worry. Let that XYZ only claim the depreciation. Okay. So as I said, first step, that calculate as if there is no division, that you will do, right? But for this asset which is purchased by new undertaking, you don't add to the first step, that asset only. Okay. When you are calculating depreciation for new undertaking separately in the second, third step, there you add that new asset only. Sir, should we apply half depreciation, full depreciation concepts here? The answer is absolutely yes. Like this, we completed the whole concept of depreciation. I feel you enjoyed it. We'll meet in the next video. Till then, take care. Bye everybody.